All right, good day, everyone. We are back with daily commentary. It's the 18th of June, 2025. So basically, yesterday, from what I outlined yesterday, levels of liquidity will be looking out for price to trade to. We traded there during I think the AM session, the New York session, at the nine sells down to the sell side liquidity. And like I said, yesterday was going to be 50-50 scenario. We won't see much of a clean price action, you understand, and my likely stick within a range, and the best possible setup will be trade setup will be going after internal range liquidity. I've learned some levels of internal range liquidity price might likely seek yesterday, and we traded to those levels. Now, for today's, we are still within yesterday's range, which is quite not the ideal scenario. We are still within yesterday's range. Although if I go for that today, yes, the closure of yesterday candle does not is still having, or should I say, the closure of yesterday candle is still not convincing for me to pick a directional bias yet. On the line, despite in regards to all what we are seeing on the chart, like I said, starting the week during the weekend analysis video, I'm bullish on the weekly perspective, based on not what I'm seeing on the chart currently, but based on the fundamentals, the whole conflict bombing here and there going on currently. So I'm bullish based on that idea. This might just be orchestrating the market for the bullish run. We've had currently we are having Tuesday's low of the week. So we might probably see Wednesday low of the week, or we might just end it here as a Tuesday low of the week. That might be possible. So for now, based off what I'm seeing on the chart, I'm still 50-50 with the whole idea. I'm still 50-50, you understand? And we have FOMC later today. All this would have been a great setup. You understand? The idea of we staying within this yesterday's range would have been lovely. You understand? The idea of us staying within yesterday's range, which is from this range high to this range low, if we could trade within this level, it would be very nice for a trade setup on Thursday. You understand? But we have FOMC and it's most times very violent. So I'm just going to put that idea on the side of us not trading outside this range, of us not trading outside this, that's yesterday's range. If it had been a normal deal, I'll probably be expecting that, but we have FOMC and I won't really put my focus on expecting that. But if for some reason we do close the day within yesterday's range, then we would have a very clean, fast-moving setup for Thursday, you understand? So, but now I'm 50-50. The directional bias is still not clear. The way we closed yesterday is not really what I'll be expecting. But like always, during a 50-50 market condition, meaning I'm not bearish, I'm not bullish. I'm just in between trading the market, or the market shows. I don't have a higher time frame bias. You understand? That's the whole meaning of me saying I'm 50-50. I don't have a high time frame bias. So currently, we have this relatively equal highs here. Today's current high and yesterday's high. And we also have yesterday's low and today's low. Currently, those levels are currently filled with orders. And we did not fill this fair value gap, which might be an aim for today. That's the possibility for price to fill this fair value gap, daily fair value gap. That's a possibility. And also we might be seeking those relatively equal highs I called out on the hourly time frame. Go down to the hourly time frame for you to see it better. But currently, we are rejecting the DC, the daily order block. And if we do trade lower, yeah, definitely we have the mean threshold of that order block as a form of target. And you could probably use this daily low as the main objective or primary objective, as well as the mean threshold of the order block. Also, if for a scalp trade, you can see for price to fill here. That does not mean I'm bearish. If we are trading downwards, if I do get a setup showing me price is going to go downwards, I do have the way I go about it, trading without a bias. I think I've taught my students about how to trade without bias, and that's basically what I applied yesterday, and what I'm going to be applying today, trading without a bias. You understand? So basically the areas we are looking out for. Yesterday's high, yesterday's low, and mean threshold of this order block, and price to fill this fair value gap. That's basically the areas that may act as a level of drawn liquidity. And going to the hourly time frame, let's go to the 4-hour time frame first of all. Just want to mark out. Okay, so we are on the 4-hour time frame now. I'm going to take out this from yesterday's low, yesterday's high. I'm going to take that out. So this is the major buy side liquidity right here. This is the main buy side liquidity right here. Would likely want to see price straight towards. And currently we have what we had yesterday was price taking out, scooping out this sell side liquidity, rejecting. Now we are reacting to the order block. That's daily order block once more and rejecting. Currently, I'm not going to, like I said, I don't have a bias yet. I don't have a bias in mind. Currently, we have this as a sell side liquidity. This as a sell side liquidity, and we also have this as a buy side liquidity. So either one of these will be my objective. And if we do trade to either one of these, means we won't be holding on to yesterday's high or low. We'll be taking them out today. You understand? So that's the major reason I'm looking for price to take either one of them. Why? Because we have FOMC today, and I'm not really expecting much of a consolidation. You understand? So if we had not did not have a FOMC today, I'll be looking for price to stay within that previous day's range. You understand? So down to the hourly time frame. Currently, like we saw, this is the level. The level of the takeout, and this is a level that might be the next strong liquidity. There's a fair value gap right here, which I would want you guys to annotate. Hold on. I'll move this here. Fair value gap right here. For those trading the good futures chart, you can see we've already traded to this fair value gap right here. And it's either a matter of us cashing up on the CFD price feed, but I'm not really interested in that. So traded down to this level. I'm not, like I said, 50-50 we might see price wanting to come on. I'm going to take off this daily fair value gap for NIT. So we have that order block price. Currently we have this. So far, we've been taking sell side liquidity. We have series of buy side liquidity still left open. We have here relatively equal right there, so that would be a nice objective. Relatively equal highs and taking this out. We have sell side liquidity right there. Then if you do trade even much lower, the mean threshold of that fair value gap, of that order block would be a nice strong liquidity, which might because this can just, you can also use this low as well if you keep on trading. For now, like I said, I'm going to work within this range, see what price does, see what price, direction price is likely going to trade towards. Now we have these levels of my internal range liquidity. We have this relatively equal high, which is very lovely. And we have this level right here. That's pretty much it. And for today, it's not the day I give you bias, but the day I give you possible objective. And you understand. So that is all. Have a nice day.